What is up? What is up, everyone? We are back, video 8 of Advanced Market Structure PDF series. All right. Now, in this video, today's example, we're going to go start on CAD JPY on the monthly time frame. All right, so let's look at this. So, monthly time frame looks like down here we have a shift in market structure, right? And from this last push down, we have a huge push to the upside. And now this would be our last down candle prior to this huge move to the upside, right? So on the monthly time frame, we want to watch how price reacts around that area. So what do we see here? All right, we see price dip down into that area lower, right? Lower than expected, right? But it's okay because we're not just going to enter off of that level, right? So watching this area here, sorry, just draw a box. So this candle here, this last down candle. And so we see, a push back to the upside, but it's not really breaking any structure. But after this retracement, we see another push to the upside and it broke structure, right? It's higher than this previous high, right? So it's a new higher high. Okay. So now that we got that confirmed, now we can go and drop down to a lower time frame. So you see we went from the monthly and now we're on the daily, right? We're on the daily time frame. So here's that rejection, right? Right here. And then we're looking at this huge break of structure. So we're looking at this area right here on the daily, right? On the daily. So here is that huge break of structure, right? Went higher than this high. So back down in this area would be your demand zone. Let me zoom in a little bit. So this last down area before that break of structure would be your point of interest, right? Well, look what happens. We get another initial rejection from that monthly point of interest, and then we have a daily point of interest that had a rejection from it as well. And we have a huge break of structure from that area. So what are we waiting for, right? We see the rejection, right? We see the break of structure. We see the shift in market structure, right? There's 3. Now we just wait for price to return, right? Back to our daily point of interest. There's our 4th step, right? And here would be our entry, super clean, 600 pips, beautiful setup, simple, right? We're on a monthly break of structure right here, and we're looking at a daily point of interest. We have a daily break of structure here, and here is our entry. So next example, we have CAD JPY on the daily time frame. This looks nice. This looks pretty juicy as well. These setups are nice. So look right here, right? Kind of got a little stop hunt, just a baby one, just a minor, right? I mean, it's not very minor, but you know, just a small stop hunt, right? Just barely. Well, this is on the daily, so this could probably be over 10 pips. But anyway, after we just breached this high, the market fell extremely aggressively to the downside, breaking structure here, right? Breaking this structure. So as price comes back into that area, right? Say we're looking here, say here's point of interest one, and I don't know, say there's point of interest two, I guess, right? So what do we want to see here, right? We want to see rejection, immediately give a rejection and a break of structure, right? Well, this immediately gave a rejection. But if we look, right, there's not really that really clear of a break of structure. But I like the way that this um, rejected from this structure here. I like when price doesn't stay around long when it rejects off of a point of interest. And I would probably write that down. Um, you know, when price doesn't stay around long around your point of interest, this is a very high volatile area, right? High volatile area. So we're going to look at this rejection here on the lower time frame, right? So we're on the daily, we're going to drop down, and we're on the 4 hour. So if we remember, right, daily was bearish. And here is that daily point of interest, right? And look at that huge rejection that we got from that point of interest right here, right? Huge rejection. Here's the low. And there is a supply area, a supply zone back after the rejection from that daily point of interest, right? And if we look, right, price comes right back to it. And there could be our entry from this. So we waited for the daily point of interest rejection, and then we waited for the retracement, which if you look here, price started respecting bullish order flow up into this um, point of interest, right? And when did it start respecting bearish order flow? Well, if we look from this high to this low here, there's another break of structure, right? So we could have had an entry here, and we could have actually had an entry here. All right, next example, we got CAD JPY on the 4 hour time frame. Okay, so what is that? Oh, okay. So CAD JPY on the 4 hour. This one looks very simple. So let's just get through this one. I mean, it very self-explanatory. Um, demand zone down here, right? Last down candle had a huge push to the upside, right? Had a huge push to the upside. Now we see a break of structure, right? Down into our point of interest. So yes, you could be a seller here, but ultimately after seeing the higher time frame be bullish, we we don't really want to be looking for sells, right? Especially since we don't know what higher time frame uh, demand zone this possibly could be rejecting from, right? So we see price reject from that point of interest here, and we drop down to a lower time frame. Yeah. So we go from the 4 hour to the 1 hour, right? And what do we see here, right? So here's our initial rejection from that 4 hour uh, point of interest, right? And we get that huge impulse up, right? But it doesn't really break structure. So what I always like to say is new structure formed, right? Right here, right? And you guys might ask, well, what does that mean? You know, you're always looking for a high to be broken. It's like new structure can be formed and then that high can be broken, right? So that's actually what we see right here. We see, let me delete some stuff here. We see that initial rejection, right? And then price starts respecting that bullish order flow and gives us another break of structure to the upside. So we look, there's that last down candle here before that push to the upside. Now you don't technically need to put your fib on this, but if you notice, this last down candle lines up perfectly with that 72 fib level. So fib from the low to the high here, because this is the high that broke structure, right? So entries right here at the 72 right off of this last down candle, and we get 140 pip trade off of that setup. So that's a beautiful setup. But all right, so let me see. Next example here, we got CHF JPY on the 1 hour. So we'll get this example quick, and then I will probably end this video here. So here's one of my favorite setups right here. So we get, I always talk about it. Yeah, stop hunt. Um, oops, stop hunt, break of structure, and return to point of interest. Right, that's my go-to setup. So we have a stop hunt, break of structure, and a return to point of interest. Right, so we're going to look at this area on the lower time frame. So we're on the 1 hour, right? We're on the 1 hour, and we look at this area here on the 5 minute. So quick and simple. Yep, quick and simple. So initial rejection here from that 1 hour point of interest. Now remember, we're on the 5 minute. So we have that initial rejection, and we see a minor break of structure here, right? Now price respects that area again and gives us another push to the upside. Now, just like the last example, right? Once I see a break of structure, I can put my fib from the low to the high that gave us a new high, right? That broke structure. So this is lining up, right? And price retraces back into a point of interest. And this entry, this inefficiency here, lined up perfectly with the 72 fib again, just like that example up here, right? Just kind of crazy. But but the market always tends to have the same behaviors. So, but yeah, right? Waited for that rejection from the 1 hour point of interest. And then we have a 5 minute break of structure, right? So beautiful entry, fib entry inside an inefficiency. When you get two point of interests that line up with each other, it's very high probable. So here is the full view on the 1 hour of the 5 minute entry. So we can see the 5 minute entry right down here, right? And from there, right, 230 pips. Another clean setup. Another clean setup. So, all right, that's gonna do it with this video. And next video we will start CHF on the 1 hour. So catch you guys in the next one, and peace out.